welcome back to the channel. My name is Kunal. Today we are going to be talking about three important ETFs which you can consider to start your SIP and your investment journey. The first one I want to talk about is Nifty Bees. Now Nifty Bees is an ETF. Now what is an ETF? Now ETF is an exchange traded fund which allows you to buy and sell the stocks or bonds throughout the trading hours on the exchange. You just need your demat account for that purpose, and you can freely buy and sell all these exchange traded funds. Now Nifty Bees itself is an exchange traded fund. So to talk about Nifty Bees further, Nifty Bees is actually tracking Nifty index. Now what is an index? See, NSE launched their index in 1995 at a base point of 1000, and since then it has grown to about 25-26,000 levels just a couple of months back, and now it is actually trading at about 23,800 levels. So if you calculate the overall compounded growth it has done, you will realize that it has grown at a compounded rate of about 12 to 13% on an yearly basis. So Nifty Bees is nothing but it is tracking the base Nifty index, which is actually defining the India's growth. Okay, so and it tracks top 50 companies in India today. So that is Nifty Bees. So this is one such ETF where you can consider to start your SIP, and also primarily because this is actually trading at about 12% lesser than what it was about 2 months back at 26,000 levels, and now it has corrected and it is trading at a discounted price of 12 to 13%. So that is one. The second one I wanted to talk today is Nifty Midcap ETF. What is Nifty Midcap ETF? Now Nifty Midcap ETF is nothing but an ETF where the benchmark index itself is constituting the midcap companies of Nifty. Now this actually considers the benchmark index of Nifty Midcap 150, which also means that the total of top 150 midcap companies are actually being considered for investment via this particular ETF. If you look at the portfolio, they have bifurcated about 77% into the mid-cap companies, about 14% into the large cap, and about 8% into the small cap. So that is the bifurcation that this ETF has got currently. If you consider the exposure, it has got financial services at about 19%, engineering and capital goods at about 15 to 16%, pharma at about 9%, IT at about 7.6%, and there are some other sectoral exposures also. The third one I want to talk about is Nifty Small Cap 250. For this purpose, the benchmark is Nifty Small 250 Momentum, right? So this considers all the top 250 small cap companies. Now primarily, if you look at the asset allocation, it has invested about 75% into the small cap companies, about 26% into the mid cap companies, and very minimal of large cap investment is also there. And if you consider the exposure, engineering and capital goods about 24.6%, financial services about 20%, metals and mining about 6.8%, and IT is about 6.8%. and some of the other sectoral exposure is also there, which is at about 6.6%. So these are the three ETFs where you can consider to start your SIP and investment journey. Now, as per the market definition, see, SEBI has defined that any company having the market capitalization of less than 5,000 crores is a small cap company. Any company having the market capitalization of maybe 5,000 crores to 20,000 crore is a mid-cap company, and any company having the market capitalization of more than 20,000 crores is defined as a large cap company. Now we have considered all these three areas for our investment. The first one being Nifty Bees, which is actually tracking the top 50 companies in India, which are actually the large cap companies. The second one that I spoke is Nifty Midcap ETF, which is actually targeting the top 150 mid-cap companies in India. And the third one I spoke of was Nifty Small Cap ETF, which is actually targeting 250 small cap companies in India, the top 250 ones. So these are the three ETFs that you can consider to start your investment journey. as a part of SIP. Now, primarily, why ETF and why now? See, ETF is one of the safest mode of investments, because one, if you invest in stocks can hit a lower circuit and keep on hitting lower circuit over and over again, and it can also hit upper circuit. So a lot of volatility is there in terms of stock. But when you consider ETF, hardly any chance that ETFs will hit a lower circuit, apart from COVID and everything that you can talk of. But it is like once in a century event where it may hit a lower circuit. But primarily ETFs are a safest mode of investment. And SIP, if you do in ETF, you get good returns at least 13 to 15% on an annualized returns is what historically we have seen. So there are so many people who are skeptical whether or not we should start our investment journey today, because say primarily Nifty has already corrected by 10%, and now going forward, even if it corrects 10% more, it doesn't make much difference. I'll tell you why. Because primarily all these SIPs, we are looking from the vision to have the investment done for at least 10 to 15 years, and at this growth rate of about 30 to 15%, Nifty itself is projected to reach at 1,50,000 levels, which is actually trading at 23,000 levels today. So it really doesn't matter whether you invest at 23,000 levels or 21,000 levels or 20,000 levels or 26,000 levels. It really doesn't matter. When you have a broad period of 15 years in your vision to start your SIP, you should be eyeing at Nifty at 150 or 1,50,000 levels, and it really doesn't matter whether Nifty is at 23,000 levels to 21,000 levels to start with. So if you have a vision of a long-term investment, you can safely start your investment journey today, and you can start your ETF journey and SIP from today onwards. So that's all for today. Keep watching our channel for more such updates, and we are going to talk more of all the investment strategies, how to analyze a good stock and all of that in coming days. And thank you for watching.